Good evening. This is Rahul Magan here as a Group Chief Executive Officer Treasury Consultant. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. Operationally speaking, we are a hedge fund having interest in US market, European market and Asian market. But having said that, we are a prop fund. By prop means no third party can invest capital in our fund. Probably you are a venture capitalist, you are a private equity, or maybe whosoever, but you cannot invest capital in our fund. Today, I would be raising a very important point in investment banking. As you are aware that now Treasury Consulting enters investment banking, and we promised that we would be bringing the facts which no one wanted to cover. Even on LinkedIn, Facebook, Twitter, YouTube, WhatsApp, and other social platforms, we covering the topics which no one intend to cover. In corporate sector, there is a concept called FP&A, which is called Financial Planning and Analysis. I myself worked as a corporate treasurer and I deeply, you know, interacted with the FP&A department of EXL Holdings. And I know that how exactly FP&A department works. FP&A department makes an Excel document which is called CMA. Now, CMA stands Continuous Monitoring Activity. Similar CMA is made up by the Treasury Department also. But there is a difference between CMA of Treasury Department and CMA of FP&A Department. Cash-rich IT companies' Treasury Department do not make CMA. The reason being they are cash rich, they don't need a working capital line, they don't need borrowing, they don't need SPLC, bank guarantee, and all these things. So they do not make this. It is the companies where cash flow is an issue, where receivable financing is an issue, where the flow of money is an issue. The Treasury Department makes CMA. So basically, Treasury Department CMA is about how the company would look like after 5 years, sometimes after 3 years. But the input is FP&A CMA, because FP&A CMA is sometimes also known as pro forma financial. Now, in this pro forma financial, they make the pro forma P&L. Like example, you are in 2022, 2023, 24, 25, 26, 27, how the company would be after 5 years. There are many pros and cons we have, let it be honest. Sometimes you agree with their assumptions, sometimes you outrightly disregard their assumptions, sometimes they make it for their bonus purpose. So there are many things. But CMA is a very important document. Now, I would like to raise a very important thing, and please don't expect this is the only video pertaining to that. When an investment bank, anyone, whether this is Goldman Sachs, JP Morgan, Citi, Barclays, or anyone, when they raise money, whether in India or outside India, wherever, whether in dollars, euro, GBP, or any other currency, are they sharing the CMA with the client? Client means investor. Now, that investor could be an institutional investor, which is PIMCO, Vanguard, big hedge funds, or it may be a FI, foreign institutional investor, or it may be a small retail investor like you and me. So the very important thing is, are the investment bankers sharing CMA format? I doubt. Because I checked S1 of US, which is called S1 prospectus. In India, we call this draft red herring prospectus. I not saw that the investment banks are sharing the CMA format. Now, first of all, 99.9% investors. I repeat, 99.9% investors are not aware what the hell is CMA. Had it been, they won't invest in the capital. Example, today, one more loss-making company applied for IPO in India. And when I went to Google, I saw their draft red herring prospectus. It was clearly mentioned that they would be in losses in future. But the point is not that they would be losses in, they would continue to be in losses in future. That is not the point. The point is how much losses. And that can only be ascertained if you have CMA. The same logic applies to the profitable companies also. So tomorrow, my favorite name, Ramlal Chole Bhature, who is a profitable FMCG company, is coming up of an IPO. Then Ramlal Chole Bhature, being a profitable company, can also mention, guys, this is the profit we had in financial year 20, financial year 21, and we expecting this is the profit in the next 3 years. Of course, disputes are there, interpretation issues are there, you can check with the investment banker, but one important thing, deliberately or by mistake, I don't think it is by mistake, it is deliberately, investment bankers are missing is the CMA format. If there is going to be a CMA, then the investor community is able to take the right decision, which, by the way, in the absence of CMA, it is almost impossible. This is Rahul Magan from Treasury Consulting Group.